When it goes, I'll count you down. So make sure you're centered. You take off your donut.
My donut is off.
Okay. All right, here we go. Three, two.
What's going on, fam? Hopefully, you are having a great night. And before we talk about tonight's live stream regarding how to get rid of PMI with a conventional loan, I just wanted to clear the air really quick about something. A couple weeks ago, I posted a Instagram reel and a TikTok regarding should you sell your house then buy a house, or should you buy a house then sell your house first. In this video, I had about a minute to put all the information out there. Because there's only a minute, I wasn't able to put all the information. Because I couldn't put all the information, a few trolling Karen real estate agents took my information and they misunderstood it, and they implied that I was saying something illegal or in the gray. I've been doing this for 5 years on TikTok, and on TikTok, but on Instagram and Facebook. There's never once when I talk about something where I would endanger somebody or do something illegal. So that wasn't what I was trying to do. And if you took it that way, I do apologize. And that's why I want to address that. There is a way for you to use vacating rent and qualify, and while you upgrade to your next property. And next Monday night, I'm going to break that down in detail so there's no one that can, so you can't interpret a misunderstanding of how to use vacating rent. So I do want to address that. Of course, when there are issues with our channel, if I'm wrong about something, I always want to address it tonight. If someone out there did misunderstand my interpretation, I do apologize, and we will be breaking it down next week. All right, guys. So I am sorry, and for those of you out there who misunderstood it, deeply apologize for that. Okay, so tonight let's get into it. I'm going to talk about how to get rid of PMI on a conventional loan. If you have an FHA loan, it's called MIP, Mortgage Insurance Premium. But on a conventional loan, it's called PMI, Private Mortgage Insurance. If it's your first time tuning into our channel, welcome to What's a Mortgage. If it's your first time tuning in, do me a huge favor. Please hit that subscribe or notification button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 o'clock, and Tuesday night on Instagram. And we post content daily on Instagram and TikTok. So definitely, if you're not following us on our other platforms, go ahead and do so. Also, this is an interactive channel. So if you have mortgage questions, please ask. Also, if I bring you value tonight, please share this video, save this video. All right, guys? So you bought a home the last couple of years and you bought it with a conventional loan, but you put less than 20% down. I think it is a great idea to put less than 20% down because cash is king. The only time I think it's okay to put 20% down is if you have tons of money sitting aside, or you're using equity from one property to upgrade to another property. But if you're going to come out of pocket, pound for pound, the 5%, the 10% are, I feel, is a better deal. But what comes with it is PMI. So after you buy your home, you put less than 20% down. You're wondering, when can I remove this PMI? So tonight we're going to break down how to remove PMI on a conventional loan. There are 3 ways to remove PMI on a conventional loan. Okay, so before we break it down, we're going to go over the 3 different ways. Of course, the first way is automatically. It falls off when your home reaches a certain amount of equity. And the second way is appraisal. After a period of time, you can order an appraisal. When there is enough equity, the servicer will remove PMI. And of course, our third way, you change the terms of your current mortgage and request for it to be removed. So those are the 3 ways to remove PMI on a conventional loan. Okay, so if you are wondering which way best fits your needs, we are going to break that down right now. And we're going to go with some strategies. So let's talk about automatically. Of course, that's one everybody loves, especially right now. If you're watching this March 2022, rates are going up. The last thing you want to do is touch your current loan. If you have a legacy rate, something in the 2s or low or mid 3s right now, you do not want to touch it. So if you have a conventional loan, of course, you want it to fall off automatically. And this is how it falls off automatically. When you pay down your house 20% from the original purchase price. I say that again, original purchase price. All you need to do is call and notify the lender and they will remove your PMI. Example, If you bought your home for $500,000 and now your loan amount is paid down to $400,000, your PMI will fall off. Or when you pay down the house 22% of the original purchase price, the lender will automatically remove your PMI. Example, if you bought your home for $500,000, the original price, when the loan amount hits $390,000, that's when your PMI will automatically fall off. You don't have to call the lender, they will know to remove it. It doesn't matter how much equity you gain over time for the PMI. Automatically is based off of the original purchase price. So if you want it to fall off automatically, you don't want to spend money for the appraisal, you don't want to refinance, and you want that automatic, remember the original purchase price. What I would do if I were you, especially if the market is not inclining at a rapid rate, or even if it's declining, I'm not saying that's declining right now, in case it's declining, there's something called your amortization schedule. On your amortization schedule, you can look and it will tell you when your principal hits a specific dollar amount every month. So let's say you bought your home for $500,000. You can look on your amortization schedule. It will tell you which payment you are going to make to be under the 20% or the 22% value. Okay, so let's say you bought your home for $500,000. You put 5% down. You look at your amortization schedule. And you go, when do I hit $400,000? Once you know you hit $400,000, you can call the lender. If you don't want to call the lender, you can wait till it hits $390,000. So that's the automatic way. It's the only automatic way. If you bought your home today and tomorrow you gain 90% equity, your PMI will not automatically fall off. A year from now, 2 years from now, 5 years from now, if you want to do it the automatic way, you got to go off the original purchase price. Hopefully that you understand that now. Now let's talk about the second way, the appraisal way. There's two factors though when it comes to the appraisal that I want you to pay attention to. A lot of you guys I think are going to go this route, so this is the one I would focus on, okay? So there are two factors, time and the amount of equity. After 2 years, you have 25% equity. So you have to wait 2 years and have 25% equity. You can order an appraisal through the mortgage servicer to validate the information to remove PMI. So after 2 years, with the 25% equity, you call your you call your servicer, I need a PMI removal kit. They'll help you they'll ask you to fill out a form, pay a specific dollar amount, and your PMI will come off. Or second way, but after 5 years, if you gain 20% equity, you can order an appraisal. So 5 years, 20%, you can order an appraisal through your mortgage servicer to validate the information to remove PMI. In some cases, when we were in a bull market, which means we were gaining tons of equity, if you put 10% down when you purchase, some lenders will want you to wait at least 1 year and have 20 to 25% equity before using an appraisal to remove PMI. So this right here is the most popular way, especially if you bought a home and all of a sudden you gain tons of equity, you got to wait the 2 years, especially if you're buying new construction. New construction hack right here. If you bought a home, I would try my best to go conventional. If you bought a home with a conventional loan on a new construction in the earlier phases, you're going to get the home at a lower price. So as each phase releases, they go for a higher price. So you will gain your 20% equity like that quickly. You will gain it in a year, year and a half, before 2 years. So on conventional, you have a high chance to gain that 25% equity after 2 years. Call your servicer, they'll remove your PMI. So I like the appraisal strategy for conventional new construction. I would fight for it, even though you might pay a higher rate on conventional than you would on FHA. Let's say you had a 680 to 720, it might be worth it because we don't know down the road where rates are going to be. We don't know down the road where life is going to take you. So on new construction, you have I normally like conventional after 740. But if you're buying new construction 680 to 740, you might pay a little bit higher of a rate. You might pay a little bit more on PMI, but in the long run, that PMI will automatically fall off, which will benefit you even more than trying to grab that lower payment right away. But of course, everyone's in a different situation, so you want to weigh in both situations, conventional or FHA, before you decide to do it. So today, you bought a home. Tomorrow, you gain 20% equity. You got to wait 2 years and have 25%, or wait 5 years and have 20%. And you can order the appraisal. You have to pay for the appraisal. You cannot pick the appraiser. This is called a BPO, broker price opinion. The mortgage service company will call an appraiser to go out there to give the value to see if you have enough to remove the PMI. And of course, like I said, in some cases, not all lenders. So you might want to call your lender if you have a conventional loan and you put 10% down or more. They might not make you wait the 2 years. They might make you wait 1 year because you did put 10% down. Not all lenders are doing that version, but from in 2020, 2021, which we gained so much rapid equity, a lot of conventional lender servicers did allow the PMI to come off in less than 2 years. All right, hopefully that helps you out. Now let's talk about the third way to remove PMI, private mortgage insurance, on a conventional loan. The refinance way, which of course this is March 2022. I don't see it happening right now. Maybe down the road when rates get a little bit better. If rates do get a pullback, you might see this happen. If you bought a home and you don't want to wait 2 years, you don't want to pay down to 20 to 22% from the original purchase price, you can refinance. After 6 months and you have 20% equity, anytime after 6 months, you can use the new appraised value for rate and term. So after 6 months, if you have 20% equity, you bought new construction, 6 months, all the other phases are done, you got 20% equity, you can refinance into a new conventional loan and your PMI will fall off. But you need that 20% equity when you refinance to remove PMI after 6 months. Okay? So if you gain 20% equity the next day, you still got to wait the full 6 months. You can't use the new appraised value till 6 months. But let's say 6 months comes by, rates are low, but you don't have 20% equity. There's two things you can do. You still have to refinance, but you can do something called lender paid private mortgage insurance, where you take a higher rate and the lender will cover the mortgage insurance. Or you can do something called single premium, which means you can pay the insurance one time. I like single premium. If you have 10% equity or more, the single premium buyout is about 1%. If you have 15% equity, it's going to be maybe 0.5%. If you only have 5% equity, it might cost you 2%. It also depends on credit. But if you don't want to wait it out and you don't know if rates are going to get better, I like single premium and lender paid when rates were low and when rates become low again. But of course, if you're watching this March 2022, rates might not be low. I might just chill out and leave the loan alone and not try to refinance. Remember, every time you refinance, it does cost you money. If they're doing these no-cost loans, it's rolled into the rate somehow, or you're resetting your loan back to day one. So make sure the juice is worth the squeeze. And that, my friends, are the 3 ways to remove your private mortgage insurance on a conventional loan. Number 1, automatically, right? You either pay it down 20% from the original purchase price or 22%. Second way is through appraisal, right? 2 years, 25% equity, 5 years, 20% equity. And of course, a third way, refinance. You either, after 6 months, you wait till you have 20% equity, you can refinance the PMI off. Or if you don't have 20% equity after 6 months, you can do a lender paid private mortgage insurance or a single premium to avoid the PMI. Hopefully you found this information useful. If you did, do me a huge favor. Please share this video. And if you're not following us by now, please hit that follow and subscribe button. Right? Leave a comment below if you have any questions. Before we get to the Q&A, guys, don't forget, if you have mortgage questions and you're uncertain about this home buying journey, please give us a call, 714-790-9697. If you have a loan estimate and you think it's sus, right? Suspect. I learned that new word, right? Sus. If you feel like it's sus, you like the hunt, Andy. If you feel like your loan estimate is sus, we should have sus Wednesdays now. If you feel like your loan estimate is sus, please send it over to info@whatsamortgage.com. We'll help you find a lender that will beat your loan estimate. It's really hard to beat right now because rates shot up since Thursday and it shot up a couple weeks ago. So if you got a loan estimate, most likely the lender's not going to beat it. But as the market calms down, it will be easy to find a lender that will beat it. If you were priced out a couple weeks ago and you were able to lock in, most likely rates aren't going to get better, right? Also, guys, don't forget, follow us on Facebook, YouTube, Instagram, TikTok, and LinkedIn. help a brother out, helps the algorithm. Please follow our page. All right. Let's get into it. Some Q&A here. If you have mortgage questions, we have mortgage answers. What's going on, guys? What's going on here? Abner, I bought my house closed in June 2021. When should I refi to lower my monthly payment? If you bought June 2021, you want to chill out right now, Abner. I would never tell anyone to refinance if I would not do it. If you bought June, just chill out. One thing I would do, I would look into see how much equity you have. You might want to do a line of credit and consolidate a bunch of debt. Right now, lowering your mortgage payment through a refinance, unless you had some non-qualified mortgage or a hard money loan, it might not be worth it. I'm assuming you're sitting in the mid threes. If you're chilling under 4% right now, 4.25%, if you got a rent under 4.25%, chill out. If you want to create cash flow, get a home equity line of credit. If you need help, reach out. I found a blockchain home equity line of credit. I know you guys are asking, how does the blockchain work? I don't know exactly how it works. I just know they use the blockchain to record the deed. But if you're interested in a blockchain HELOC, I found a company that will loan you up to 95% loan to value if you have a 760 credit score or higher. If you have a 700 to 760, they will loan you up to 90%, which beats most banks right now. Most banks are going from 80 to 85. There are some 90s, but most of these banks are taking 2 to 3 months. This blockchain HELOC, you can get it in as fast as 5 days. And they do a soft credit check up front. So if you like the dollar amount and you like the terms, you can go ahead and click yes. Then they'll run your credit. But they're able to see your credit, see the value of your home, and tell you how much money you're going to get. Because if you can't refi, at least consolidate all your debt. As you know, the Fed's going to increase rates 6 more times before the end of the year. That means credit cards, student loans, personal loans, auto loans are going to start skyrocketing. Might as well consolidate that debt and lower the payment. Guys, it is expensive to live in the United States right now. How much you paying for gas? Leave a comment below. Let us know. But consolidate that debt, right? That's my pitch for the night. Hope that helps you out. You like that one, Andy?
Yeah, sorry. That was almost better than the ad.
I know it's almost better. What's going on, Ronnie? Michael, how can I purchase a second property without selling my first one? Michael Ruiz. You know, Michael, I'm glad you asked that question because sometimes I don't want to wait till next week, but I am going to tell you. So if you want to keep your current property and you don't want to sell it, you can use something called a home equity line of credit. If you have enough equity, you can either do a cash out refinance, which might not be a great deal right now because rates are up, but you never know, right? You can do a cash out refinance, or you can do something called a home equity line of credit. Draw out the cash and do the math to make sure it makes sense for you to upgrade. If you're going to upgrade, you're going to go at least 5 to 10% down. Make sure the vacating rent, the rent that you are going to claim on the property you're vacating, you can use up to 75% of the rental income to help offset your current mortgage so you can buy your new home and not try to qualify both mortgages. That's why a lot of people don't qualify. You want to be able to use that vacating rent. But to use vacating rent, you're going to need a lease agreement. You're going to need an earnest money deposit check, and you're going to need a rent survey, which the lender will handle for you. All right? Except for you got to find someone to rent your place first. Hopefully that helps you out there. Thank you, Brandon Rodriguez. Dre, what's going on? Moses Ramirez, FHA PMI. Any way to remove FHA PMI. Moses, to remove FHA PMI, if you did not put 10% down when you buy the home, you have to refinance from FHA to conventional. Where rates are at right now, it might not be worth it, but you never know. Give us a call, 714-790-9697. Let us reach out to a couple mortgage brokers and direct lenders for you right now and see what is better for you. All right, but you want to run the numbers. But if you gain that much equity, if you can't refi into a better deal, consolidate that debt, fam. All right. What up, Cindy Wang? How you doing? Jolene, what's good? Mel Queen, what if you go from FHA to conventional? You can go from FHA conventional whenever you want, but if you do not have the 20% equity, you can do the single premium or lender paid or do monthly until you have enough equity and the PMI will fall off. Hopefully that helps you out, Mel Queen. PMI does not count for VA, correct? Raphael, VA loans do not have private mortgage insurance. You're Gucci. All right? Linda Rangel, if an FHA loan, it doesn't fall off on its own? No. On an FHA loan, PMI or MIP does not fall off automatically. Hopefully that helps you out. Hey Jess, if I'm on FHA October is my 5th year. I want to buy another house and rent out this one I'm living in. Should I refinance? Jess, leave it alone. Give us a call or reach out and try to get a home equity line of credit. If you got an FHA loan right now, unless you got some nasty rate, we don't never know. If you have a smoking rate, let's say you bought it 5 years ago, most likely you're gonna get something in the mid or high 4s right now. So it depends on where your loan's at. Definitely reach out. Let's run the scenario. All right, Jess? 714-790-9697. Give us a call or DM us. Gus, I placed an offer at 480. Is it worth doing down payment assistance or a regular conventional loan? My credit score is 800 though. Gus, I would look at 480. I would look at a 3% down and match it up against down payment assistance. At 480, I actually do not mind down payment assistance. That's just my opinion. At 480, I'd rather come out of pocket 10 grand right now than come out of pocket 25 grand. I'd save that 15 grand. Okay, that's what I would do. Especially with that credit score, you get a cheap PMI. Shout out to Brandon Rodriguez. Brandon Rodriguez is the man. I work Lauren Rialto. She's doing a great job. Lauren is doing an amazing job. Abner, 6.09 regular unleaded. Dang, $6, Abner. Where do you live, fam? Will interest rate decrease? Tony Green has a great question. Will interest rate decrease? So right now, it doesn't look like it. So right now, as you guys know, inflation is out of control. So we printed 40% of America's money in the last 2 years. 40%. So however old America is, we printed 40% of the money in 2 years. So there's all this money floating around. When people have money, they spend. The more they spend, they drive up costs. When they drive up costs, the only way the government slows it down is increasing rates. So as they increase rates, they want people to stop spending, right? When people slow down their spending, it can control the inflation, right? They're trying to suck all the money back out of the economy, or they're trying to get people to stop spending it to drive down the cost, okay? So because they're doing that, you will see rates creep up because the bond rates are going to change, interest rates are going to change. But check this out, Tony. When they increase the rates, of course, eventually people stop spending. When the government, when the feds, right, figure out that, hey, no one's spending any money because everything's so expensive, they're going to do a pullback. When they do this pullback, rates will drop. I don't think they're going to do it soon because they haven't really seen the new inflation marks yet. Once they see that, hey, inflation was at 7.9, oh crap, it's lower now, it's at 4 or 5%, it's manageable, but no one's spending any money in the economy, we got to back off. That's when you see rates drop. I think if it does, it'll happen near the end of the year. So if you bought a house right now from January to June and you got a high rate, I think by November, December, maybe first quarter, you'll be able to kind of scoop up a low interest rate. Will it be hit 2? I don't think so. Maybe in the 3s though. Maybe. I'm not making any guarantees. Hopefully that helps you out. Was that well explanation, Andy?
Yeah, it's good enough.
Okay. Carlos, what about that blockchain HELOC? I love that you asked about this blockchain HELOC. So, like I said, 760 credit score or higher, you can go up to 95%. 700 to 760, you can go up to 90. Most banks are only letting you go up to 80 or 85. And because it's blockchain technology, 5 days. In 5 days, or maybe 5 to 10 days, you can get your money. That blockchain be moving at like Sonic speed, right? Sonic's coming out, by the way. So definitely, guys, I like the blockchain HELOC. They do up to 95% in 5 days, and it's a soft credits pool. That's what I like the most about it. All right, hopefully that helps you out. Thank you. I refinanced on January. I was at 4.75 to 3 1/4, save about $900 a month. Congratulations, Michael. Tania, per usual, your video is extremely informative. Thank you so much. Jonathan, what's going on, Jonathan? VA, I got that from, what's it called? What's that movie with, never mind. Remember, Jonathan, like, oh, Hotel Transylvania. There we go. VA loans currently renting out will move back in February. How can I do a cash out refinance? Yes, on a VA, you can go up to 100% cash out refinance on a VA, Or if you want, you can do something called a home equity line of credit. I would look at both scenarios, right? Everyone, of course, I know the people who's pretty much sponsor me tell them to do a cash out, but I keep it 100. Sometimes it's worth doing a cash out depending on where your rates are at, Jonathan. Sometimes it's worth doing a home equity line of credit, right? Always looking out. Guy, when do you think we would be the best time to buy a home with 20% down? I think the best time to buy a home with 20% down is when you either have tons of money and 20% down is not going to even scratch the bank, put a dent in the bank account, or you're selling a home and you're using the equity to upgrade to another home, then I would do 20% down. Hopefully that helps you out. 2.25 FHA, keep it, Moses. Pay that PMI. Forget, dude. At think about this, guys. Also, you have to remember there's something called the amortization curve, right? The lower the rate, the lower the curve. So when you make a payment with the lower rate, you attack more principal. That looks kind of bad. You attack more principal than you do interest. At a higher rate, you attack more interest than principal. So if you have a low FHA rate, 2.25, keep it. Do you think the market will crash with the interest rates? Ramona, I don't think the market's going to crash. Here's why I don't think the market's going to crash. Unemployment is back to where it was pre-COVID. That means everyone got jobs, right? Everyone got jobs right now. So they're all working and they're able to make their mortgage payment. If rates go up, they just won't sell. If rates go up, they just won't refi. There might be less buyers in the market, but there's not more homes coming into the market, but people are still able to make their mortgage payment. Where I see the hugest dent in inventory is going to be new construction. Because don't forget, new construction, all these people who got pre-approved for new construction 6 months or a year ago, they don't qualify anymore. But no one lives in the property to make the payments. So those homes are going to sell. I feel like that is the next trend is people are going to start buying up all the new inventory, because if rates go up, people just don't sell. Like, why would I upgrade if rates go up, right? I won't need to refi, but if unemployment's almost in the 3%, I still have a job. I'm still making my payments. Hopefully that helps you out. Is it not a good time to do a cash out refi? Will rates go down anytime soon? Ruby, I would look at a home equity line of credit right now. I would not do a cash out. That's just me. Rates would be nasty. I think you might even hit 6%. Dennis, can you talk more about Lock and Shop, the video you posted on your IG today? So, Dennis, and most of you guys, anyone who was pre-approved before February, most of them did not qualify because the rate they qualified with doesn't exist anymore. They have to get reapproved, and most people aren't approved because that rate doesn't exist. And that's going to happen to a lot of people who got pre-approved from February. What?
Because the rate went up beyond that.
Yeah, because rates went up beyond that. So think about you pre-qualified from February to March, and in May they announced another rate hike, and it's a higher one than expected. Rates are going to go up again, and you won't qualify. So banks, what they're doing, they're allowing people for the first time in a long time, they're going to allow you to lock your interest rate before you shop, because they want you to actually find a house and actually get the house. Of course, why would the bank do all this work for you to find a house and not qualify for it? Because rates went up. So they're allowing you to lock the loan first and then shop. There are fees that come with it, but every lender works differently. If you have more questions on the Lock and Shop and you want my help, give us a call, 714-790-9697. But before you do that, ask your lender, hey, do you do Lock and Shop? No, but we give low rates. What's the use of a low rate when you can't lock it? What happens 4 months later, you find your house, they gave you a low rate 4 months ago, it doesn't exist. Now you don't qualify. It's happening to a lot of people right now. And majority of people who got pre-approved before February, all those buyers pretty much are falling out of the market. I'll tell you that right now. Anyone who was pre-approved in February, I say a big percentage, a high percentage don't qualify. Why? Rates were at 3.25. Homeboy, we're at 5.5 right now. Okay, so it's hard. So that's why you want to get qualified and lock in the rate you got qualified with. So you're out there shopping, no problem, right? You don't want to shop like, oh my God, I love this house, Jenny. And all of a sudden, you don't qualify. Okay, hopefully that helps you out. Do you expect another rate hike? It should be, if so, should I wait to buy? I think, Tony, there is another rate hike in May. Depends where inflation falls. If inflation in April don't look well. May don't look well. If they don't look strong, they're like, hey, inflation's still up in the 7, 8, 6%. The Feds might increase the Fed rate another quarter. If they increase it by a half instead of a quarter, if they increase it by a half, we're going to end the year at 2% inflation. And that 2% in not inflation, sorry, 2% Fed rate by the end of the year, that would collapse our economy, right? So if you're going to buy stocks short right now, don't buy. Okay, just kidding. Anywho, but that's another day. The house is under contingency, allowing the seller to find another home. Is there a way to lock that down before it goes up? Yes, Gus. Ask your lender, see if they can do a lock and shop. All right, guys. Hopefully this information brought you value. If it did, do me a huge favor. Save this video and share it. And if you're not following us by now, please do me a huge favor and hit that subscribe and notification button. All right, guys. Enjoy the night. We want two questions. MJM. How soon after closing on VA home loan can I trade in my car? As soon as you fund and your loan records the next day, trade in your car if you want. As soon as your loan records, do it right away. Carlos, what do you think about refinancing with combo loans? I think it's a good thing to combine your first or second. You want to check the weighted average cost you are spending on borrowing the first or second. So do the blend rate and make sure your refinance rate is lower than the blend rate. If it's not, don't do it. All right. Is it a good time to build a new pool? Do you think will affect if you build a new pool, so Ramon, let's say you bought a home. Oh yes, it's going to affect you for sure. So let's say you bought your home 2 years ago. Prices jumped 20%. You're going to pay property tax on today's rate because the pool does require permits. Okay. Javier, can I request my lender to run a BPO instead of a regular appraisal? No. Talk to your servicer. Every servicer does it differently. Some servicers do BPOs. Some want to do appraisal. It all depends on the servicer. Hopefully that helps you out, Javier. All right, guys. All right. Hopefully you enjoy the content. We want to all our so put on SPY for 6 months out. Quentin, I would buy a 1 year or 2 year put contract, and I'd buy a 2 year contract and I'd do a put for sure. Right? For sure. I am watching right now SPY, QQQ, and Apple like a hawk. Right? And I'm putting it all. I'm buying puts. Dude, follow Nancy Pelosi. There's a reason why she's putting. Right now, all the practical retail buyers are they're just buying up the market and watching when the banks come and jack everyone's money. If you got money in a retirement that's in S&P mutual funds or something, you might get cold jacked. If you plan on retiring the next 2 to 3 years, I think they're going to come, and when the market crashes, you're going to lose all the profit last couple of years. There's a way to take your money out of that retirement, but still keeping your 401k or your IRA. I would pull it out, or you're going to lose all the gains you made. Well, that's another day. We're going to talk about that on Wednesday on Instagram. All right, guys?
You're not a financial advisor.
I'm not a financial advisor. Once again, disclaimer. I'm not a financial advisor. I am pulling my money out of all my mutual funds right now, and I'm gonna leave it in my Roth. My IRA for another 6 months before I put my money back in. Right? I don't want to lose all my gains. Anywho, I'm not a financial advisor, but you want to check it out Wednesday night, 9 p.m. on Instagram. All right, guys. We want to end all our episodes with our attitude is gratitude. Without you, there is no us.